Oil prices are giving back some of yesterday's gains. This after OPEC agreed to extend its production cuts for a further 9 months in Vienna as the cartel attempts to support crude prices. As we enter the second half of the year, where next for oil? Joining me to discuss is independent oil analyst and Forbes contributor, Gaurav Sharma. Gaurav, good to see you. So, how much of the price action that we saw on Monday is really about OPEC, and how much of it do you think is actually about the trade truce between the US and China?
Well, good to be back, and to be honest, not an awful lot really. I would give it an 80-20 rating, 80% in favor of the Trump-Xi talks out in Osaka, and I think that is what drove things even before OPEC took to the podium, and they took it quite late in the night in European times, even before they'd taken to the stage. And of course, it had been already leaked out in Osaka while Trump was saying, let's talk to the Chinese. On the sidelines of it, the Saudi Crown Prince and President Vladimir Putin were saying, let's roll over the cuts for 6 to 9 months, and quite possibly 9 months is our preference. So my question is, this OPEC meeting was so farcical. It was twice delayed. It was supposed to happen in April, never did. Then June, then July. And what happens? They get completely upstaged by, I suppose, Trump's Twitter account and Trump's quips about talking to Chinese, plus the president of Russia and the Crown Prince of Saudi Arabia saying, yeah, let's roll it over.
So, how much significance do you think OPEC still has, given what we're seeing in the US in terms of increased supply? And obviously there's, as you alluded to, a bit of a credibility problem right now as well.
Absolutely. I think a piece of data has been doing the rounds in the city over the last, at least the last 48 hours, that OPEC now has a market share that's less than a third of the market. Simple mathematics, if global demand is less than 100, just sort of south of 100 million barrels per day, and OPEC, going by the last Platts survey, is producing 30.17 million. That was the headline production in May. Well, there you go. There's your maths. It's less than a third. And what's happening is not that they have a third market share, less than a third of the market share, is the fact that a lot of these American light crude barrels available to Asian importers at very competitive prices are heading eastwards. In the east, out in the east, the two major producers, Indonesia and Malaysia, their production is declining, and these American light crude barrels are fitting right in. Plus, the Asians are, sort of adopting their refineries to take more light crude rather than sort of heavier crudes that OPEC exports. So this is a big, big problem. And if OPEC loses credibility, then I guess these OPEC meetings wouldn't carry as much of an impact as they currently do.
So do you think the market is considerably oversupplied? Because when we look at the inventories data, they're broadly pretty high week by week. That sort of chimes with what we're seeing from OPEC in terms of its decision to extend those production cuts. So what's your kind of take on the supply picture? I
think it's still fairly oversupplied. I think when the Russians and the Saudis shook hands all the way back in the fourth quarter of 2016, and then of course started rolling on these cuts 2017, 2019, and now they've rolled it over all the way to 2020, the thinking was they'll bring the inventories down. That was what we were told. We were told it was not about the price. It was about inventory rebalancing. But 2 months ago, the Emiratis, and even all the exporters in the GCC admitted that they were still shy by about 30 million barrels. Now, this afternoon, just as we discussed the subject, OPEC has said, well, maybe that's not really a very good benchmark. Let's look at the data between 2010 and 2014. So I'm asking, what on earth is going on here? So if that was the benchmark, inventory rebalancing was your goal, are you admitting failure there? Now, what should the market read onto it? Well, medium-term picture, I guess the medium-term picture is pretty bearish.
All right, and what about sort of the demand side? What's your sort of temperature on the outlook for global growth? We've been seeing a number of data points soften. Should we be concerned? Is that going to continue to put further downward pressure on the price of oil?
I think the key variable here is where do the US-China talks go, not Trump's Twitter account, because he has mood swings. One day he says something, another. Is there any tangible move between the Americans and the Chinese? If we see some tangible moves, if there's some indication there'll be some sort of settlement, you'll see an uptick of at least $3 to $4. But right now, a whole lot of people have said, well, we've had previous false dawns. So should we really take it as some sort of a bullish pull there? I very much doubt it. I think we are destined, given this toing and froing between Beijing and Washington, I think we're kind of stuck where we are.
So you don't see any kind of trade resolution anytime soon?
It's very difficult to tell with this president. He's very inconsistent. So given those inconsistencies, if this issue gets resolved by the first quarter of say 2020, then we should count ourselves lucky. And it could, deteriorate a lot further before it goes. So I'm a little bit down for the second half of this year.
So year-end targets, Brent, WTI, what are you thinking?
So if we take the most conservative demand growth forecast, about 1.1 million barrels per day in terms of global demand growth, I think we're still stuck in the same range. I think about $65 to $70 long-term average range for Brent, and I'll be more inclined towards the lower half of that. With the West Texas, we're looking at somewhere between $58 and $64, and again more towards the lower half of that range rather than the upper half. As for sort of short-term bets, OPEC has become a perfunctory news play now. I'll go as far as to say that. It happens, you have a punt on that, you lay out your spreads based on sort of news flow like OPEC would, but it's fast reaching a point where it's no longer the major event that it used to be.
So if that's not the major event, clearly we should be looking stateside for the key outlooks when we're trying to gauge what's happening with supply. So tell us a bit of insight about what you're seeing in terms of shale production.
I think if you look at the US production, what we're seeing here is constant growth. We keep hearing that there is economic trouble there, that some of these companies are not breaking even, that some of them have cash flow problems. Be that as it may, the way that the dynamic of the shale industry works is that once you spud those wells, there is nowhere for that oil to go but to come on stream. So even if they're making losses, even if their break even falls below $35, there's not a whole lot they can do. They have to put that oil onto the market. Now, US production is forecast to be somewhere in the region of 13 million barrels per day, which would be phenomenal. It is already the world's largest producer. So you take the Americans, you take the Saudis, you take the Russians, between them, that's well in excess of 30 million barrels per day that's coming onto the market. And there is your inventory problems. Within the OECD dynamic, American inventories have almost always remained healthy throughout this entire period of 3 years. I think the long-term outlook is bearish. You might have infractions of sort of periods between now and Christmas that the oil market might see some jumps, especially if the president tweets something really positive about reaching out of China. Mm-hmm. Overall, the picture is still pretty bearish.
All right, let's just switch tact a little bit. I wanted to ask you about the Saudi Aramco IPO. I mean, we're hearing media reports that it could be set to restart preparations. It's been kind of off, it's been on. We've been thinking it might not happen. We've been thinking it's going to happen. I mean, where are we now? What are your expectations? Will it ever come to market?
Look, can I be brutally honest? If it does,
we love brutal honesty.
Let's just say it comes to market. I'll be on a whole host of people out there in the City of London waiting to short it. Because for the moment, I think as things stand, look at any IPO, not just an oil and gas IPO. By their very nature, there's certain disclosure standards that have to be met. So in order for them to list in London or New York, they have to meet those disclosures. I don't think Aramco is comfortable with that. Let's say hypothetically they are comfortable with that. What kind of dynamic are they portraying given the fact that they've now started admitting that some of their reserves are not quite what they're cut out to be? Let's say that IPO doesn't happen out in New York or in London, and they go for something like Hong Kong or Singapore, then they won't get the valuation that they crave. So, it's another one of those things. It's been a low news day. Let's dust that old one out and say, we're going to work on an IPO. And how long have we been hearing it? 2016, right?
Yeah.
So no, if they bring on the IPO, good.
So
lots of people waiting to show.
Won't be holding our breath.
It's no longer, I very much doubt it'll be the mother of all IPOs that it was touted back in 2016.
All right, Gaurav, thank you so much for your time.
Pleasure.
That was Gaurav Sharma, independent oil analyst and Forbes contributor. Thanks so much for watching IGTV. We'll see you soon.